InvestorIdeas.com podcast.
Good afternoon and welcome to another InvestorIdeas.com podcast looking at cannabis news, stocks to watch, as well as insights from thought leaders and experts. Today we're looking at announcements from Aurora Cannabis Incorporated, trading on the TSX as ACB and the OTCQB as ACBFF, ICC Labs Incorporated, trading on the TSX Venture as ICC, Cannabis, trading on the CSE as Lilly and the OTCQB as MPHMF, and Hydropothecary Corporation, trading on the TSX as HEXO. But first, according to Coherent Marketing Insights, the global medical cannabis market was valued at $3.52 billion in 2017 and is projected to exhibit a compound annual growth rate of 24.4% over the forecast period of 2017 to 2025. The CBD segment is expected to gain significant traction over the forecast period on account of the continuous engagement of manufacturers to introduce hemp cannabinoid oil products in various forms. Among therapeutic application, pain segment accounted for the largest market share, owing to increase in government initiatives to enable patients to use medical marijuana as a treatment in chronic pain management. Some of the major players operating the global medical cannabis market include BOL Pharma, Tilray, MedRelief Corporation, Aurora Cannabis Inc., Canopy Growth Corporation, Insys Therapeutics Inc., Afri Incorporated, MGC Pharmaceuticals Limited, GW Pharmaceuticals, and Medical Marijuana Inc. So first, looking at Aurora Cannabis Incorporated, who announced today that it's agreed to a new $200 million debt facility with a potential upsize of $250 million with the Bank of Montreal. The facility will consist of a $150 million term loan and a $50 million revolving credit facility, both of which will mature in 2021. A short period after the implementation of Bill C-45 in October 2018, the company may request an increase of up to a further $45 million to the term loan subject to the agreement with BMO and the satisfaction of certain legal and business conditions. BMO will also be providing up to $5 million in other credit instruments. Closing of the debt facility is subject to completion of final due diligence, negotiation of definitive documentation, and satisfaction of conditions precedent customary to the financing of this nature. The debt facility will be primarily secured by Aurora's production facilities, including Aurora Sky, Aurora Mountain, and Aurora Vi. Strategically located at Edmonton International Airport, Aurora Sky is the world's most technologically advanced cannabis facility, projected to produce in excess of 100,000 kilograms per year of high-quality cannabis at low per gram costs, and slated to deliver its first harvest this week. Next, looking at ICC Labs Incorporated, who announced that the government of Uruguay, through its regulatory authority, IRCCA, the Cannabis Regulation and Control Institute, has granted the company an additional land package of approximately 55,000 square feet in order to increase its production capacity. A relevant milestone that demonstrates the confidence that the government has placed in our company to continue executing the terms of our recreational cannabis license granted for the first 5 years on January 14, 2016, commented Alejandro Antalik, Chief Executive Officer of ICC Labs. Next, looking at Cannabis, an integrated clinical stage pharmaceutical development and OTC consumer goods marketing company, who announced today that it's entered into a non-exclusive licensing and technology agreement with Lifestyles Ltd., the global leader in sexual wellness sector, for its non-branded, patented arousal gel and lubricants for use of condoms as a standalone product for retail and consumer markets around the world. Partnering of Cannabis non-branded products and technologies to reach new markets and sales channels is a critical component of our business model, said James M. Thompson, President and CEO. Partnering with the worldwide leader in sexual wellness, Lifestyles Ltd., is an outstanding way to expand our sales as we look forward to a long-term, mutually beneficial future. Under the terms of the agreement, Cannabis will receive a variable single-digit royalty on net sales of all products sold worldwide by Lifestyles Ltd. And on any other brands. Cannabis will also assist Lifestyles Ltd. In the development of additional sexual health and wellness retail consumer goods. Finally, we look to Hydropothecary Corporation, or HEXO, who announced that the 4 zones of its 250,000 square foot greenhouse expansion are now licensed by Health Canada. The licensing of 2 additional zones align with HEXO's continual harvest methodology, which splits the greenhouse into zones that can be tailored to each stage of plant growth. 4 of the 10 zones now have plants in and are fully operational. The other zones will follow in the coming weeks, with all 10 zones set to be operational by August, said HEXO CEO and co-founder Sébastien Saint-Louis. We are confident we will be ready to fulfill our contract as a preferred supplier to the Société Québécoise de Cannabis, SQDC, and are excited to see what the future holds. These ongoing expansions, along with our innovative, high-quality products, put us in an optimal position as we continue discussions with our provincial authorities, added Mr. St. Louis. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. If you would like to be a guest or sponsor of this podcast, please contact investorideas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the investorideas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investment involves risk and possible loss of investment.